Hi there, it's Saturday the 2nd of April 2017. This is Andy Rowe on trendfollower.co.uk and welcome to this video in which I'm going to have a look at the different asset classes and decide whether I want to be in or out of them. But first of all, before I do that, just a quick reminder, I'm not a financial advisor. This is just a video about what I do. Please don't take it as financial advice, just regard it as entertainment, if you will. Now, quick reminder about what I do. I divide the investment pot into 5 different slices: shares, property, gold, commodities and bonds. And I use a very simple timing system to decide whether I want to be in or out of the market. Basically, I use the average price for the past year, which is it's a moving average, 52 weeks in a year, so the MA52, that's the green line that you can see here. When the price of the asset rises above the MA52, then I buy and I remain invested until the price drops below the MA52, at which point I turn the investment back into cash and wait for the price to fall and then rise up above the MA52, at which point I decide that it's back in favour and I want to be in the market. And this is great for trending markets. It's rubbish for non-trending markets, as you will see later. But let's have a look at shares and see how they've got on this past week. I use a unit trust called Fundsmith Equity to get exposure to shares. It has a variety of UK and US shares, high quality blue chip shares. It's been a very popular fund in recent times, run by Terry Smith, and here it is, the price is above the MA52. So what do I want to do? I want to remain invested. There's no signal for me to sell at this stage, so I'm quite happy to be exposed to shares through the Fundsmith unit trust. Now I'm going to look at property, and I've divided my property investment into 2 slices. I used to track just one investment trust, but as you'll see later, the price just went sideways. It was chopping, so I've been also tracking a UK ETF, a fund of funds run by iShares, and this is the graph. You can see that it went up, and in sort of 2016 it started to go down quite a lot. Very sort of up and down ride, but just recently it started to rise. It sort of broke up through the MA52, fell back down again, and a few weeks ago came up through it, and this last week it rose again. So I'm happy to remain invested in IUKP, so the iShares UK property ETF, which, if you look at it on the iShares website, has a whole load of different UK property funds in it. So that's fine. Let's hope that continues to rise. The TR Property Investment Trust is a big UK investment trust which has been very trendy in the past, which is why I was quite keen to use it. But then it started to go sideways. Really, it's been chopping up and down, given lots of false buy and sell signals. It's been very difficult to trade. When it broke up through the MA52 a few weeks ago, I did reinvest in it. It's come up to the sort of recent highs, but this week it's fallen back down again. Where will it go next? I don't know. So very choppy ride for that particular property investment trust. So there you go. Past performance is no indicator of future performance. You can see how it's been a very trending, easy to follow investment trust for a trend trader. So the assumption was that that would still be the case in the future, but no. So as soon as you think you can make an assumption, it comes back and haunts you. So a useful little lesson for me there. Okay, I'm going to look at gold now, and to decide whether to be in or out of gold, I like to track gold priced in sterling, because when I liquidate my investment, the money goes back into sterling, so it makes sense to decide whether to have gold or not by valuing it against sterling. And here's a ETFS physical gold PHGP. So this is a sterling denominated ETF, and you can see the buy signal here back in 2016, and there was a sell signal and then a rebuy signal. At the moment the price is here. It's come down very slightly this past week, but it's above the MA52, so all the indicators are there to remain invested in gold. I don't actually use this ETF to remain invested. I use one that's denominated in dollars and where the money is held abroad, but or the gold is held abroad. So commodities. Now let's have a look at the fund that I use to track commodities, which is the City Natural Resources High Yield Trust. This has been doing stormingly well until a few weeks ago, when it started to fall massively, and it fell. At one stage it was actually below the MA52 during this past week, so I was absolutely convinced that at the end of the week the price would remain below the MA52 and I would be reporting that I had a signal to exit my long commodities trade. But no, the price actually has risen this week. You can see there's a little uptick there at the end of the line. So the price has risen this week. So great, so I'm going to remain invested in this commodities fund. There we go. Bonds now, I don't actually trend trade bonds. I just use 3 different ETFs, iShares ETFs, one denominated in British pounds, one denominated in euros, and one denominated in US dollars. I just hold them, and I've got exposure to 3 different currencies, so there's a bit of currency hedging there, and I just hold them and don't even worry about them. Okay, so let's have a look at the traffic lights this week. So a green light for shares, I'm staying invested there. Ditto, both of the property investments have a buy signal still, so I'm staying invested there. Gold remains on a buy, commodities remains on a buy, and bonds remain on a buy, as they always do. So what do I have to do this week? Well, nothing. There are no new signals for me. So thanks for watching. I look forward to catching up with you next week. If you haven't been to my website, this is the website, www.trendfollower.co.uk. Thanks for watching,